Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Sean M., Mark R., Joe G., and Cindy W. We've got a returning guest on the program today. Mr. Joe Ovsenek is back on the program to update. Joe is the president, CEO, and chairman of P2 Gold. The company is a gold and copper project developer advancing the Gabbs project in West Central Nevada, United States, which is in its early permitting and final economic study stage. And also, the company has the BAM Greenfield Gold Copper Exploration Project in British Columbia, Canada. P2 Gold is listed on the Toronto Venture Exchange under the symbol PGLD, as well as on the US OTC markets under the symbol PGLDF. Joe, it's great to have you back on the program. Welcome.
Thanks, Andrew. Really looking forward to getting back here.
Yeah, it's good to have you back and looking forward to chatting a few things, Joe, and get things kicked off here. Why don't we get to the market for a moment? What are your thoughts on the junior market here? You know, we're coming into the end of 2024. Things have been pretty rough out there, but I'd like to get your thoughts on how you're looking at the market at this point. We're into mid-November, and of course, the sentiment out there builds and then diminishes pretty quickly. Do you see it changing in 2025?
Yes, I do. I think the market is starting to change. It's at the early days of the change, but I think we are seeing a bit of a change just from discussions we've had, interests we've seen. Um, you go back a year ago and you just didn't see anything. It was scorched earth. You're starting to see, what they always say down, the economists are always going on about green shoots. So I think we're at that stage right now where we're starting to get a bit of interest coming in. And we've got, don't get me wrong, we've got a ways to go yet. But, once you do start turning, you can find that it turns quickly. So we'll see how things are as we get through the end of the year. The election, probably, screwed things up a little bit on a nice smooth flow. So let's get into the new year, get through the inauguration and that. And then I think you're going to start to see the juniors starting to move up a bit.
A choppy one here into the end of the year. And then, of course, as you know, we've got the customary tax loss season, which can play into temporary sentiment declines as well. And then getting into the start of the new year, you should see things start to pick up and hopefully get some type of attraction here in Q1. So appreciate your comments on this. And it should be an interesting few months ahead of us here. Joe, the company had a number of news events since you last came on the program. First, I want to come to the most recent news. The company completed an equity financing during September. Cover off where the company stands now on cash on hand, how far you see that carrying the company, as well as the capital structure now post financing in terms of shares outstanding and, of course, major shareholders, because once again, management continues to backstop the company and has a significant position. So just talk about those things.
Okay, well, we've got some things underway on additional financing, but from where we're at now, we've got the cash to see us well into spring, if not, late spring here into June. It just depends how we move. Uh, so that's nice. Gets a little pressure off. We had initially announced the financing, and the idea was Ken and I were going to put some money in. We'll pay for our. We've been loaning cash, but we thought, okay, let's do some equity and we will put in the money we need to pay our BLM fees and a bit more just to have some stuff on hand. And we got a lot of response. We went out for $500,000. Ken and I put in 250, and we ended up at $1 million, and we could have raised more, but we needed to stop somewhere. It was at a nickel, not an ideal price to finance at, but again, it comes back to what we spoke about before: is seeing that interest. People are starting to position themselves, and they see P2 and Gabs. We've got a project with we'll talk more about later on, but a lot of potential. That project will be a mine, and they're able to buy it at, they were picking it up at a cents on, for a nickel a share. Cap structure, we're, roughly 140 million shares outstanding right now, fully diluted over two. But again, our market cap's about, right now, I think as of today, we're about 11 million Canadian dollars. And you put that in perspective, our Gabbs project, even with a 15% discount at current prices, is, many, many multiples above what we're trading at. And even if you use lower metal prices, we're still heavily discounted. So it just shows there's opportunity here, and this is the time to take advantage of opportunities.
Joe, just with the management insiders ownership, just talk a little bit about that, where you guys stand today post financing.
Off the top of my head, we're just a shade under 22%. We actually might be, actually, we're a bit over that. Ken and I are the majority of that. So, we're, 22, 23% of the issued and outstanding of the company. We also have, we've participated in financing. So we also have warrants in that. So even on a fully diluted basis, you're probably seeing us in that 20, 22, 23% interest in the company. And because we're believers, not just that we have cash in the company, but we believe Gabbs is going to be a mine, and we're putting our money where our mouth is.
Good to see you guys continuing to participate in the financings, continuing to hold the shares. And as this starts to get recognition as to the fact that Gabbs is moving forward and, as you say, will become a mine, I think the market will start to recognize that, and we'll start to see some value add here, especially adding some better market conditions as well. But even at current gold prices, things aren't so bad. On further news, Joe, going back to June, the company announced a business combination with Eskay Mining, which didn't happen. Talk a little bit about that and why the transaction originally as planned didn't happen, as well as the exploration partnership.
A few things there to jump into, but overall, when we put the deal together, the idea was SK had access to capital. They had Crescat as a significant shareholder, a strong market cap, and things that we didn't have. The market was, like I say, the market's turned since when we signed this. We were talking last May with these guys at SK. But anyways, at the time there was no capital for juniors. It was looking bleak. They had access to capital. We wanted to move our project forward. They have a really good piece of land in the Golden Triangle, which we know well. We're right next door to it, pretty much at Brucejack. So it seemed like a good fit. We have a couple guys that are looking to retire. We take on their company, we merge, we take on the whole company. They provide the access to capital, and we have Gabbs as a nice, solid project to move forward to mining. And we have the property in the Golden Triangle, so we can work on that in the summers. Great potential for a big discovery. And then in the rest, the 4 months of the year you work in the Triangle, we'd be in SK, and the 8 months of the year we'd be down at Gabbs. And so it looked like a good fit from that perspective. So we sign things up, we get going, and then they tell us, well, we don't want to raise money. We don't think the market's valuing us properly. So we're just going to sit here and not raise money. And we said, well, look, our deal was you would raise cash. Some of that cash would go to Gabbs. The rest would go to a drill program up in the Triangle. Well, yeah, we've decided against that. We'll just do a little program. And so we said, okay, we don't want to be part of the deal emerging. We're going to back out of that because the whole purpose of this was for you to bring capital. But we will honor our commitment. As part of that deal, we'd agreed, if you remember the initial announcement, we'd agreed to run a program through the summer for them. So we said, look, we'll stand behind that agreement, but we're just not going to go ahead with a deal with you on merging the companies. So we did that. We carried out our obligations. I think we had quite a successful program for them. And look at, we would have considered working further with P2, working with SK, but we wanted to see some benefit flowing to P2 Gold and our shareholders. And so we asked them for some stock options for P2 Gold so that if we were successful in a discovery on their property, that the shareholders of P2 Gold would participate in the upside. Well, they didn't want to do that. So we said, okay, well, look at here's the program. We finished it up. All the best for the next year's program, but we're not going to support you if there's nothing in it for our shareholders. And so that's where it is right now. We've done what we said we'd do. We like to stand up to our commitments, and but we've done that. And so now let's move on, and we'll focus on PGLD, and we'll move our Gabbs project forward. And let's not get distracted by SK stuff where there's no benefit to our shareholders.
Joe, thank you for updating on that and going through the various issues. And it sounds like everything now has come to a conclusion. So I appreciate you guys working on that and putting this together, because there was a lot of synergies. And why we're on this topic, further interest in M&A. You guys obviously are looking at projects, looking at different ways to add to pipeline and add value for shareholders as Gabbs remains the focus. But is there anything else out there you guys remaining to be interested in looking at M&A transactions if they make sense? Just talk a little bit about that.
Look, we're interested if they make sense, but with our current market cap and position, we really need to start seeing some strength in our share price, our currency, so that we can do some things. There are projects we're quite keen on, but you know, we don't want to. We've already got a fair number of shares outstanding, so now is the time. Focus, get the share price up. And then if we have the share price up and there's something that looks attractive, let's take advantage of it when we have a stronger currency. But right now, with our currency being weak, yeah, we don't want to step out.
To me, that makes sense because we have that core project to be focused on, which I think is the place to really be looking, which is Gabbs, which we'll get into here in a moment. Just wanted to back up as well and talk a little bit about BAM. Any immediate plans, let's call it immediate 2025, anything that is planned to do? If so, what would you be looking at as far as exploration targets, schedule, and then when the market can expect results, assuming you guys are going to do some work there?
BAM is a tough one in that we love the project. We think it's got great potential. Even though the market's turned a bit, it's still the only cash available to work on the project. I've been offered a couple financing now, it all comes back to flow through stock. And the problem with flow through is, and this is why our share price, to some degree, is why our share price is where it is today, is, we issued a fair bit of flow through. The people, the flow through funds, they're in it for a tax. It's a tax function, not I'm looking for a company that's going to grow and we're long term holders and we're behind you. It's we need a tax benefit. So let's get this, pass along a tax loss, a write off to our shareholders, and then whatever they can make on the stock, they're happy with. And so let's just take the tax benefit, sell the stock, and move on. And that does not help the junior space. So the triangle is an expensive place to work. And with the inflation that we've had over the last few years, it's calmed down a bit. But those prices, they go up. They always say inflation's down. Well, sure, inflation is down, but that inflation is a rate of acceleration. So we have actually increased the price of everything, and that those prices are holding steady and climbing a little bit. So it's very expensive to work in the triangle. And so you don't want to be issuing a bunch of flow through shares um, for for an exploration program where unless you make a really big discovery, which it takes exploration is not one hole. It takes a lot of work, a lot of thought, trying different things, and so most often you're not getting the big discovery on one program. It's over multiple programs, and in the meantime you're just getting diluted and diluted and diluted more by these flow through shares that just keep getting sold and whacking down your share price. So it's a long-winded answer to saying, look, we're pulling back from exploration up in the triangle until things change. And when we speak to BAM specifically, look, it's a great project, and because of that, we've been approached by a couple different parties that have interest in it, and so we are always open to talking. So we are talking to different people about things, and so if we could see the right price for BAM, and we could take that cash and move Gabs ahead down south, well, we have to look hard at that. So, we'll keep looking at our opportunities here, but yeah, there has been some interest in BAM. So, it always you don't want to say no. You always want to talk, see what people's thoughts are, and how well they fit with what you're doing, and then we can see, okay, where is money best spent? Is it best to hold on to BAM, or if we do monetize it, how will that move Gabs forward, and what's the best return for our shareholders? So that's what we're looking at right now with BAM.
Joe, I appreciate that. And I think to focus on Gabs to me makes the most sense. And I think you agree. If market conditions are as such and the value of the company is such that it makes sense to put together an exploration program that can result in some good potential at BAM, running that in parallel would make some sense if the market conditions are there, which they're not. So that's how I'm looking at this as well. I think the optionality of BAM and the potential pipeline of BAM makes a lot of sense for the company. But Gabs is really, I think, the key project, and obviously the driver towards cash flow is probably where you're going to pull out the most value in this market. So, of course, if you guys see that there's a right deal that comes along, I think it's worth looking at that as well. Why don't we shift gears to Gabs now? Where are we on this project as far as next work plans and work on early permitting? Just talk about the initial or the main focus area right now, Joe, as we get into 2025 and what you would preferably like to accomplish in 2025 on Gabs.
What we're doing right now with the funds we've raised, I've mentioned this in the past. Historically, in the late 80s, early 90s, there were some water wells permitted on the property. And so those wells lapsed with no work on the property for years. So we've just initiated re-permitting the water wells because, as you know, you can't do anything without water. And so let's get the water permits in place. We believe, we've got a hydrologist working for us. No issue in getting this done, but you do have to go through the applications and the forms and the processes. So that is underway now. So that's our first step in permitting. Once we have the water permits in hand, we can then move to filing the mining plan of operations. And with that in hand, then we'll go ahead with our environmental submission. So we're starting the process now of permitting. We'll see how long that takes, but I would think with the change in government, uh, you know, Gabbs was well positioned for permitting, already just because it's copper and gold, and so coppers is on that critical minerals list. But with the change in the White House, I think you're going to probably see a little more push. I think everybody agrees on that. I'm not stepping out here towards approving projects on the mining side. So yeah, I think this will be good for Gabs on the permitting side. So we're getting that going now and looking to push hard on that. The other thing we're doing, and we're just trying to get the scope lined up for this next phase of metallurgy that we need to do. We need to do one more round of metallurgy to move the project ahead. If you recall, right now we've got heap leach and milling, and the heap leach, we'd like to do one more round of metallurgy for the heap leach. Right now, recoveries are 78% for gold and 54% for copper. But if you look at some of the prior work we've done, where we had bottle rolls, and gold's significantly higher than in the bottle rolls than what we saw in our initial column work, and copper as well, into the 80s for recoveries. And so we think there was maybe insufficient cyanide applied in the columns. So what we want to do is get new columns done, new column work done on the metallurgy side, where we introduce more cyanide early on in the columns, so that we can get the recoveries up. And we think that realistically, we should be able to get a few percent increase in the gold recoveries and 10% plus in the copper recoveries. And when you do things like that, that essentially all goes straight to the bottom line. There's very little additional cost involved, and with a significant amount of cash generated from the increased recovery. So those are the things we're looking at right now, and we'll be running both of those through 2025.
Joe, and what's your expectation on results coming out of that? And then will that play into what would be considered a definitive study at that time? Joe, just talk a little bit about the timing of those results, any other work during 2025 there, and then what you would see as far as final economic study.
Okay, and now look at this is all, right now we're cash constrained, but assuming we do have access to some cash, and we are working on some things that will get us access to that cash that we need. The one wild card is how busy the labs are on the metallurgy. But I would say we'd like to see the metallurgy completed by mid next year. We would also like the permitting on the water, say mid next year as well. Get those things all lined up about then. Once we have the metallurgy in hand, we roll straight into a feasibility, start infill drilling. We need to do about off the top, looking at what we have for resource and converting that over to right now we're both off the top of my head say 40% indicated, the rest inferred. So to bring the inferred resources up into the indicated category so they can be used within a feasibility study, we need about 15,000 meters of drilling. So we'd like to get going on that in the second half of next year, and then also start on the engineering studies that were needed to move things forward. Now, a couple things that we can look at, and we're looking to optimize as well on that. If you look at the plan of operations, the way we're planning on mining Gabbs deposit, it's a heap leach to start with because the oxide mineralization's at the top. And then as you get down, into year 5, we start year 6, and the plan is to start a mill up so that we're running a mill for the sulfide mineralization, 5 million tons a year, and we're heap leaching on the remaining oxide mineralization for 4 million tons a year. And this runs through the end of the mine life of 14 plus years. So one thing we can do to maybe to speed things up is permit the heap leach process first, get that permitted because that should go quicker than the sulfide mineralization. So that allows us to get up and in production quicker. And then we've got 5 years or 3-4 years to get the permitting in place for the mill or the sulfide mineralization in the mill. And then that allows time to get the mill constructed so we can kick off milling sulfide ore in year 6. So a few things to work on here, but 2025 should be a good year for us because it's I think going to be the year that we start to generate some momentum. We've been sort of on our back foot with the market and that, but the way things are looking now, we'll be able to start generating some minimum momentum in 2025. And once we get that momentum going, things should move quickly.
With respect to the heap leach phase, what would be the plan there? Just we'll couple this with financing too, just to get heap leach up and rolling, just based on your experience there in Nevada and your typical permit times there in Nevada for a heap leach operation to get going. Do you see that the heap leach operation would be potentially underway by late 2027? And then also financing package for that, essentially phase 1 heap leach. Just talk about what you can as far as how you would approach the financing of that phase 1, and also any progress on financing discussions.
On that, I think 2027 is a little early, but 2028 I don't think is out in left field. Like that gives us 3.5-4 years to get through the permitting, get through feasibility. Some of these things will go in parallel, and then get construction done so we can get the ore, start pouring gold. So no, I think 2028 is entirely reasonable. 2027, well, I won't say it's not possible, but I think realistically we're probably focused 2028. Financing side, we're looking at some things. Um, Once we get that next round of metallurgy done, there's potential for, we continue to talk with the royalty companies, and so there's potential there. Something else we're looking at is a joint venture where we would, you know, JV on the project level with a company in return for them doing a lot of the funding to get things into production, and so it's always a trade off of how much funding for how big a percentage interest. So you got to look at all the opportunities, all the options when it comes to financing. So we're looking at these things. There's also so there's royalties, there's joint venture. At some point, there will be an equity market, and so we could get a significant amount of equity and layer on some debt. So we'll keep our mind open on this. We're not really going down one path over another, but over the next, say, 6 months, we should start seeing some progress on one of these fronts.
It sounds like we should have some pretty good set of news flow and progress on Gabs during 2025. So I'm excited to see what we have come up in 2025 on that front. Any other comments on Gabs, Joe, and then we'll move on.
No, I think we've hit the main things. Look, Gabs is, I'm constantly looking at it. We're looking at this and that, and the more I look at it, the more I just think, geez, this is a great project. The infrastructure is beyond compare. It's got great infrastructure, which makes up for some grade. There's excellent potential to increase the grade of the deposit with not that much work. So there's just a lot that Gabs has going for it. Again, we've just been cash constrained. But as the cash starts to show up, you're going to see us taking advantage of these things and bringing them to the knowledge to the market where we've got, how we're going to improve the grade, how we're going to move it forward. There's just so much potential that, yeah, that's why I'm convinced Gabs will become a mine. And it's just a question of, pushing hard and being persistent. So we'll get there, and I think 2025 is the year where we're going to break out.
Joe, and with that on Gabs as well, just talk a little bit about the land position there at Gabs in terms of once you guys get down that pathway of getting things into construction and continue to bring the resource category confidence up higher, just with regional exploration at the project level, is there anything you can tell us just as far as what you would see on potential upside? Is there opportunity to expand further? Just talk a little bit about some of the additional potential there once you guys get into, well, we're in development now, but is there anything else in good market conditions where you guys could potentially do some additional exploration and add more copper, more gold to the project?
Absolutely. Right now, there are 4 zones of mineralization. 3 zones, for people that are not familiar with the project, 3 zones are gold copper mineralization. One zone is just gold. It's a smaller, about 100,000 ounce gold zone. But all the zones remain open, so all room for expansion. Just looking at the zones and what we can see, we think right now we're just a shade under 3.5 million ounces gold equivalent. So that's made up of 1.12 million ounces of indicated gold and copper, equivalent, and then the remainder in the inferred category. Well, we believe that there's probably, just on looking at those existing zones, 4 to 5 million ounces of gold equivalent at those 4 zones. So right there, that's an extra. What is that? That's 30% more, or over 30% more. Probably closer to 45% more if I could do math. But it's so lots of potential from those zones. All the zones outcrop to surface. No one's really done any work looking for blind targets. So there's potential for blind targets on the property. Zones that don't quite come to surface, so they're not sticking out of the ground, so people don't recognize them quickly. We need to use more geophysics and a little more geology just to understand the structures going on. So put some time into that. So potential for even more near surface mineralization. And then again, the gold copper mineralizations, porphyry mineralization, we feel the porphyry that's, the feeder zone for this near surface mineralization is on our property, probably down about 400 to 500 meters, so not that deep. And so excellent potential for porphyry at depth on the property. So there's just a lot of potential at Gabbs, whether it's putting it into production at what it has now, but also for additional ounces that can be added on and extend the mine life. As I mentioned, right now the mine life's at just over 14 years based on our preliminary economic assessment. So this should be a long life mine, because we expect there's a lot more ounces there than we're currently seeing.
If there's that opportunity to increase mine life and also increase production profile, do both of those on this project, I think that's a great value add here that should be pursued when the time's right. And if the financing package turns out as well, where there can be some money set aside for that as well, be interesting to see what you guys get set up there, because having that upside potential, why this is in construction or maybe the early days of production, I think that's going to be very important to highlight and bring forward as well. So appreciate the thoughts there, Joe. Just as we wrap up here, I wanted to just touch base with you on community work across both jurisdictions, really, Nevada and also British Columbia. Any thoughts there on just community work you guys are doing there? Any changes or proposed government policies either in Nevada or in British Columbia that might impact exploration or work at Gabs, as well as, of course, any comments on ESG and climate change?
Just jumping in on Nevada, the government's changing here, so hard to say which way. Look, I think, policy wise, we're going to have supportive, government policies in place for the project. So, and right now, it's not like it's bad for us right now, but I think it'll be, become, more positive for Gabs as we go forward over this next 4 year term. So that's Gabs. Hard to, get see too much because it's early days and we don't even have the changing government yet. Up in BC, we're not doing much in the way of community work now because we're not doing any work. And so it's expensive doing community work. It's like anything, nothing for nothing. And so we've pulled back from our expenditures up in the triangle, waiting for the market to turn. BC, we're big fans of the Golden Triangle, but the government in place now doesn't make it easy for exploration companies to do work. And so everything they bring in, you can get things to work, and if you're persistent and you just keep going, but it all costs money, and so that also adds to the cost of the exploring in the Golden Triangle. So it, it's just an expensive place, and community work is just part of the cost, and dealing with government regulations, again, more cost. So it some great deposits, but expensive places to work. Ah, on climate environment, I think, one thing that came out of the election down in the States is, people, I think people don't give credit, or the people on the left don't give credit to people in the center or the right, that it's like, oh, they hate the environment. No, like a lot of people in the center and the right, like mining people, a lot of them spend a lot of times outdoors, in the field, that whether for work or just personally, they're camping, they're fishing, they're hunting, and so they don't want the environment to be ruined either. And so I think that's, I think that's where, part of this with the change in government here is, some of this environmental stuff that they push and all that is just, uh, I don't know, it just makes things too restrictive, and it's on the idea that everybody is out to just abuse the environment. And so put it all together, people overall are not out to make a mess of the environment. They want to keep things, clean air, clean water, and a place that they can go and enjoy. And so I think there's common ground there, and I think people just have to work together to get on that common ground. As far as climate goes, well, you're called a climate skeptic as soon as you say anything, but none of the climate models are ever right. And maybe the Earth is. Some people say the Earth isn't heating up. Some people say it is. The weather, this, that. I think the science is very unsettled. Whenever I hear people say, "Well, all scientists agree," yeah, when there isn't actual a hard fact that you can point to, that's a political statement. So I'm just hoping that as we move forward, we get away from the rhetoric of crisis and emergency and all this, and we look at hard facts. What can we do and to improve things in where we are? Because look at what this idea that can like take Canada for example. We contribute 1.8% of greenhouse gases, from my understanding of the facts. China, we could go to zero and it would make zero impact on the world. And what we're saying is, oh, well, we're leading by example. Well, we're going to lead by example. We're going to put our industries out of business because you need cheap power to be. That's the basis for all these countries' advancement economically. So it's a little bit of a rant on my part here, but I think we just have to become realistic on how economies work, what makes economies work, and how we can work together, because Canada isn't going to solve all the problems of the world by itself. So, anyways, that's a bit of a rant there, Andrew. I'll end it on that.
Joe, thank you for that. And I can echo a lot of what you said there and support a lot of your statement. When you look at things, you hear these terminologies out there, green, clean, energy, net zero, all this stuff. But the reality is there is no form of energy that's green or clean or any of that. Every form has an impact. Now, some forms are actually have a pretty small impact, but they all have impact. So there's not technically this is green and clean. It's not that at all. There are better options for sure. And I think Canada's been able to adopt those options throughout its history. For example, commercial nuclear power has been a very good option. Hydroelectric in Canada, very good option. Those are probably two of the best forms out there that get close to that clean and green terminology, but it still requires, both of them require a lot of concrete. There's impacts for sure, environmental changes, fish ladders. You need things on hydroelectric, you need things on nuclear, you need to put them in the right places. There's all of that stuff. So the terminology's got to go. You got to get to reality here. When it comes back to ESG and it comes to trying to protect the environment, well, first of all, you got to have mining in order to do so, because mining provides the equipment and the technology and the wealth to be able to do so. So that's the first part. And then you can't have community work or ESG, if that's the terminology you want to use, at all if you don't have any money. And so no money, you don't get any of this. And so that's also a pretty basic concept here. I think people are exhausted on hearing about it. I do think that
Yeah.
there's a growing population of people that are exhausted hearing about climate change. Is it really about the climate, or is it about other things? Is it about money? A very fair question. Extreme weather and all this other stuff? No, look, it depends on where you live, and it depends on your context of history, and actually have you looked at the data. I mean, for example, this year, while places like Florida do receive hurricanes, Florida has a growing population. It has a growing economic base. So naturally, a hurricane that comes in 2024 causes more dollar damage. Of course, we also have devaluation of dollars, Joe, but it's not to say that it's worse. And actually, this year, from a hurricane standpoint, it's been a fairly moderate hurricane season if you're in the area. And if you're in that zone, you understand that. I would say hurricane season in 2020, for example, was more violent than this hurricane season. Again, depending on where you live and depending on the landfall of those hurricanes. But suffice to say that I think people are exhausted of hearing about it. You've seen a blow dealt so far in the US with the election towards some of these policies, and rolling back of the lunacy and rolling back of the red tape, I think, will start to come. We'll see. But it looks like that's what will likely happen. No, I very much appreciate your comments, and people have to get back to basics. And the basics are that if you don't have the money, you don't have the economics, none of this stuff's going to happen. And if you don't have the ability to extract minerals, we're not going to be able to do any work for the environment. So my take on it. Any further comments, and we'll wrap up.
That hits the nail on the head. Couldn't agree with you more.
And you highlighted it well with the statistics comparing Canada. Appreciate your comments on that. I can very much align with what you're thinking here as well. Well, Joe, let's leave it there for now on this one, and a couple questions to wrap up. For potential investors in the audience that are listening in here, they're looking at gold stocks, copper stocks, they're looking at development stage companies like P2 Gold. The company has a market capitalization of about 10 million Canadian dollars here. Why should P2 Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
Well, I think because we have a solid project, it's going to be a mine. And as we talked about, 2025 is going to be a big year for us. We're going to be starting to get moving forward. So it's a good time to position yourself. There's great potential for upside. If you just look at the economics, go on our website, look at the news releases on the project. It's just a strong project that you're buying for pennies right now. So get well positioned now because 2025 should be the year we break out.
And Joe, how can investors and interested parties reach out to the company?
Oh, look at if they email me, phone me, I'm happy to chat with anyone. Always like to talk about P2 Gold. If you look at our news releases, you'll have my number on it. You'll have my email address. So just get in touch, and we'll happy to chat.
Joe, well, thank you again for coming on and updating on P2 Gold status. Keep up the work pushing Gabs development ahead. We'll talk again soon. Thank you.
Thank you very much.